And welcome to TradeAlyticsLive.com, September 4th at 1:20 in the afternoon. Today I'd like to talk about the SPY, the VIX, VXX, gold being over 1700, and our code red today that we have out, AKAM, that's AKAM. Alright, let's look at the chart here and just kind of dissect the S&P 500 and just kind of figure out what's going on with it. Now that Labor Day is behind us, this could be the week that we break out of the channel that we've been in. You can see that we've been in this channel since August 8th. So we're running on about a 4-week channel, and it's a bullish channel because it's consolidating on the upper bands. And if you see the support, which is this line here, and the resistance, which is the 142.25 to 142.50 line, this is the channel that we've lived in over the past 4 weeks as traders and money managers. So what do you do with these channels? You trade long against support. Closer to 140 you go long, keep a tight stop. Sell into resistance, 142.25 to 142.50. And then if you poke above that 52-week high and we close above there, that's really what we're waiting for. Then you can actually go long for a much bigger move. So since we're down here towards support, we're looking to add longs closer to the 140 area on the SPY. Today's low was actually pretty close to there. It reached 140.13. So we got long the market. And now we're going to see where this market closed. I think today's close is going to dictate what's going to happen, either on a big gap up or big gap down for tomorrow. And it looks like the market feels like it wants to get out of this channel sometime soon. It might be next couple days, it might be this week, it might be next week. But I think you have to have it on your radar, buying against that support, and see if we're going to be closing strong over the next several days to give us that, that real comforting, warm feeling that we're getting ready to go back into 52-week highs. But it hasn't happened yet, so we're looking at things like the VIX. The Dow is down more than 100 points today, and the S&P was down more than 10, and the NASDAQ was down more than 20 at one point, and the VIX really didn't do anything. You can see here on the VIX, and let me just erase a couple of these lines so we can kind of get a good, clear picture on what the VIX is doing. And the VIX is it's an ETF that measures fear in the market. Even though the markets are down significantly today, the VIX is actually kind of flat. It's only up 12 cents on this ETF. So let's just draw some lines and see where the resistance is and what's going on with the VIX. It's got a nice little tight wedging pattern. And when stocks or ETFs wedge like this, you just wait for them to break and you trade the break. The tighter that they get, the longer that they get, the bigger the break that'll happen. So if we do get a sell-off in the market and a lot of fear starts to come in, we're looking to go long the VIX above $12 for a move up to around $13.80 to $14, which is it's a $2 move, so it's going to be right around a 14 or 15% to the upside. And if we go below the area, if we close below 1142, then we can either short the VIX or go long the market. I prefer to go long the market because this indicator right here is actually kind of flat on a big sell-off day. So it looks like there could be a rally into the close, or there's a lot of relative strength in the market and just haven't really put that fear factor in yet. But let's look at gold. Gold is interesting today. Looks like we broke up above 1700 on gold. There's a good possibility that QE3 means that we could be pouring more liquidity into the market, which will devalue the dollar, and that will cause gold and other precious metals to go up. So if we look at a larger time frame on the GLD, we had a very large breakout of the symmetrical triangle, as you can see right here in this area. You can see how it wedged up, had a nice breakout, took a few days to digest the breakout, and then boom, right up here to this area. So we're looking, as of today, we did get above that 1700 on GLD. It looks like we could possibly get as high as 175 on the GLD, which is about another 10 or 11 points higher. That'll probably put the gold index closer to 1900 at that point. So looking at gold, looking at the VIX to see which way the market is going to move if the fear comes in. And if we do sell off into the close and we start breaking down below that channel on the SPY, which is at 140, this is the channel that we're talking about, that 140 area. We have out a code red today, and it hasn't triggered yet, but it's got to be on the radar because it's in this very bearish rising channel. So when stocks are in these rising channels, once they break, typically we see a lot more volume come into the stock, and we should get a really nice move out of this one. So if the market sells off, the code red is out there on AKAM. It's hovering right on that support. 3740 area, 3735 is an area where you can start a position. That would be a start to break this this ascending trend line. And then if you draw another line, if we can kind of zoom in, I'm going to zoom in here and just draw another line, which is that support that it's been hanging on to. That's the area where we actually want to go with much more size, which I will be going much more size. If we can, I'm starting that position at 3735 area, and if we break below this line, which is that kind of double support at 3690, the measured move should be, we should get some selling pressure down to long-term support right into about $35. So I'm looking for about a $2.50 trade to the downside, covering on the way down, booking profits on the way down if we get the market sell-off. So keep AKAM on the radar, AKAM, because it hasn't triggered yet, and I think if we get that big market sell-off, you're going to find a lot of these bearish rising channels start to break, big volume coming in, and there's just a home run textbook play on how to trade a rising channel. So keep those on the radar. Pay attention to today's close. I think it's going to be a good indicator on what the market is going to do tomorrow and possibly the next day. And at some point, we're going to start coming out of that channel on the SPY and some of the other indexes. So stay tuned for tomorrow's Code Red Play of the Day and enjoy the rest of your afternoon. Scott Mason, TradeAlertsLive.com. We'll see you tomorrow.